Hello traders, this is Anonymous Scalper. I had a great trading day today. I took one trade and I was done in 7 minutes of trading. But I made this video of two separate videos. So the first one that you will be seeing here with these two charts, I recorded before the market opened because I wanted to show you how I prepare pre-market before I actually start trading. And I usually do it just 5 or 10 minutes before the open. Nothing sophisticated, nothing overdone. Very simply. So as I mentioned it before in my previous videos, but now I just wanted to show you it before the market opens, and we will see how that goes when I will record the actual trade. So as I mentioned, I like to mark the 4 main levels for the Tesla, SPY and the Qs. So these are always the same levels. So it's the pre-market low, the previous day low, and the previous day high, and the pre-market high. So again, not to get confused, always those same 4 levels: pre-market low, previous day low, pre-market pre-market low, previous day low, pre-market high, previous day high. So these are the 4 key levels I'm going to be looking at, because I know that, and I think most of the traders who have been in trading for a while know that around these key levels there are a ton of liquidity, limit orders, stop orders, and if they get triggered and if there's enough of them, the price can really get going either downside or the upside. Alright, so now I marked Tesla. I'm going to do the same for, as I mentioned, the Qs. And as you can probably see on the left, I'm using the daily chart, as I of course mentioned before, and on the right I'm using the 30-minute candles because it's easier for me to mark those levels. The daily chart I'm using to get just the general feel and the idea of what's going in the market. So as far as now, we can see that for a while it has been consolidating, and it's very hard to try to predict where the price is going to go. So there's only probabilities, and at this point I don't even know what the not the specific probability as a number, but where the chances are. So at this point I know that I'm going to be very careful, and I will let the pure price action dictate what I'm going to do, and my job will be to adapt to it. So I'm doing the same thing with SPY, marking pre-market high, pre-market low, and the previous day low, and the previous day high, and the previous day low. So now I have this is basically all I do before the market opens. That's why 5 or 10 minutes at max is all I need. And when I mark these levels, as I mentioned before, I take a look at the daily chart just to get the general feel what is going on. So we saw with SPY that it was kind of ranging, with the Qs it was kind of ranging on the daily. Now on the SPY we see that it is kind of ranging as well. It had a nice pullback, tried to break to new highs, kind of broke this level here, but instantly got sold back, and it's at the same critical level. So who knows, it might go down today, it might go up today, it might range today. We're here not to guess where it's gonna go, where the market is gonna go. We're here as scalpers, we're here to adapt and to react, to take very quick profits and to be done and forget it. Alright, so let's move on. Alright, so what we see so far, when the market opened 9:30, the first candle was a really nice red candle, and the second candle instantly broke the pre-market low, which I was telling you about before, the level that I marked. Now, you might be questioning me why I didn't take this trade. I don't like taking trades like this when there's like no clear bounce of the critical level before it breaks it, you know. If for example, if it would have been that this nasty red candle closed here, then the second candle would have been like a green one, and the third candle would have been a red, I probably would have taken it because it would be a bear flag pattern, very quick off the open. I love these the most because the quicker and the nicer it forms, the more chances it works at the very beginning, because there's high volatility, high volume, and all that good stuff. But as I mentioned, I didn't take it because it was just a random second candle that went down, and it's very risky because we see here that it kind of bounced a little bit from this level, this 987 level, 987 level. And when the second candle just opens and goes down, I'm not sure if it isn't going to bounce back up, because there might be a ton of buy orders here who are pushing it to the upside. And of course, buyers with market orders might have stepped in and they might want to push it again. So I'm not taking risks like that. I really want to see a nice open range breakout or a nice flag pattern. So let's see how it went. I didn't take any trades yet. I was just waiting for a really nice setup. And we see some weakness on the Qs and the SPY. Now this kind of starts to look like a pattern I like. You see, it went down, it went up, and it's going down. At least it wants to go down again. And what is it forming? It is forming a very nice bear flag pattern. And when the bear flag pattern forms either below the low of the day with the potential to break it to the new low of the day, or if it was vice versa to the new high of the day, these are, in my opinion, the highest probability setups for you as a scalper, where you can catch a really nice risk to reward ratio and catch a really fast, nice trade and make a living of it. So let's just see how it went. But before I let it play, just take a look at this. The volume is rising. The volume is rising. The volume is rising, which means momentum has come into play. A mass of sellers and so on. The selling pressure has come into play. You know, more and more people are shorting or selling their positions that they took for longs. And let's see how it goes. All right, still kind of bouncing. Still kind of bouncing. And you see, it looked like it wants to break it, but I didn't take the trade because it didn't get close enough. And especially with Tesla, that happens a lot. Sometimes it looks like a really nice bear flag pattern, but it might be just start of a range. And when it gets when it starts ranging and it gets choppy, that's where you lose most of the money. So I was waiting for a better sign for the Qs and the SPY to really start to push it down, and for the Tesla's price to really come closer to this 983 or very close to it. But the volume is there, and take a look at the time in sales. It kind of starts to speed up. You see, time in sales speeds up. All right, it's pushing. Qs and the SPY is pushing. I'm in the trade. I'm holding it. SPY and the Qs are dropping. All right, the breakout happened. It gets some buying pressure as well. Buyers are trying to buy it back, but it keeps dipping. All right. I like it. And all right, I'm out. Now, the reason why I'm out, Tesla broke the level that I was interested in. It was about 983. That was the low of the day before it broke it. And it went very close to 980. And when it comes to these round numbers, a lot of the time they have some sort of support if the price goes down, or for example if it went up to 1,000 and the candle that went to that 1,000 was already very extended, there might be not enough buying power to break through the key area of 1000 because there might be just too many sell limit orders there that the market buyers wouldn't be able to eat up. So if they're not able to eat up, eventually those sell limit orders would push the price down. So when it came close to 980 and it kind of bounced back a little bit, I thought it would be better for me to just take those nice profits because I was already really nice in profit on that trade, than to hold it for a nasty pullback and to hope that it's going to break again. These are exactly the moments where I lose money. But when I'm taking the profits quick like that, that's where the consistency for me starts to show up. So I'll just let it play to see how it went afterwards. It bounced back up, then it started to go down again to the 980 area. But you see, it can't break it. It can't break it yet. It's bouncing off. Yeah, and this is the reason why I cut the trade. Because sometimes, if it doesn't break it, it can pull back against you really nasty. You have to be very careful. But seeing that now the Qs and the SPY are really showing some weakness, you know, there's more conviction to still hold it. But if you would replay the trade again, you would see that at that very first breakout, when it bounced back up, the Qs and the SPY bounced back up. I can actually turn it back a little bit. All right, let's take a look again. And I will stop the recording at the moment I quit the trade. Let's look at it again. So I'm in the trade. I'm holding it. All right. Qs and the SPY are pushing it down. All right. All right. All right. We're going down. We're going down. All right. You pulled back. Now take a look at this. The SPY kind of made a spike and the Qs kind of made a spike. So it was showing some sort of maybe temporary buying power, and here it bounced a little bit as well. And again, as I said, 980, it didn't reach 980, but it was very close to that, and sometimes it doesn't even need to get to the exact price. But I didn't want to risk because I was nice on the profit, and I have a rule for myself. If I'm approximately at least $100 in profit, I would rather just take it and call it a day. So let's just see how it went afterwards. Yeah, you see, it broke 980 eventually, and then at the same moment with the next candle, it started to go up. And if you're controlling your risk really well, if you're managing your risk really well, you probably would have been out somewhere here already. And a situation like this where it went against you as much as that, that's a pretty huge loss. All right, so checking the daily P&L, I made $139 in 7 minutes of trading. The reason why it says 16:36 and not 9:36, it's because I'm based in Eastern Europe and this is my time. So basically it's 9:30 in the morning in USA. But for me, it's 4:30 p.m. So basically, 4:30 p.m. the market opens in my local time. So 4:37, that means I was trading just for 7 minutes, and I was done for the day with $138.95 to be exact. And like I mentioned to you before, I have a rule of thumb. If I had one really good trade, which was at least $100 in profit, I just take it, one and done, I call it a day. And being a scalper, I really don't care. Being a scalper, I really don't care if it goes much deeper afterwards, because you never know. I don't try to predict the market. I don't try to hold a winner for a long time. I just want to grab a piece of a candle which is at least $100 in my case, but I would be happy with just $20 if it happened to be like that. As long as I'm green or flat, that's fine. That means if I'm flat for a day but I took a trade, that means I'm managing my risk well, and so on. And because of grabbing a small piece of a candle like that, I find it easier to find consistency. I know that some people like to hold a trade for even a couple of hours, or they like to jump in a trade when the market opens and to close the trade when the market closes, but it's not my style. I'm a scalper. I don't have patience. I really like the action. I like to adapt and react. That's it. I don't care what's the reason why it is falling today, what's the reason why the market is falling today. I just came here to do the best trades that I can. I recognize my pattern. I was patiently waiting for it. I executed it, and I'm done for the day. So I really hope your trading day was good as well. And thanks for watching, and I see you in the next one.